Hi there, Serial Trader here. I want to do a quick check-in with crude oil. Now, since the last video, which I believe I made near the end of December, at that point in time I was anticipating that we were close to a bottom, and I think it was around $44 or $45 when I made that video, and the actual low was 42.36. And I basically proposed we were near the bottom of this impulse wave down, the initial impulse wave down after breaking this very long-term ABC fourth wave up from that major low that we had in 2016, and that was the $26 low on crude. And then that fourth wave peak, as I have it labeled here, came in at 76.90, and then we had a very, very strong decline down, and it subdivided into 5 waves quite convincingly. And then basically the next, other than buying that beaten up, bottom area there, and riding this, what I believe is a counter trend rally to the upside up, the next major kind of trading opportunity on oil would be once this counter trend move completes, getting positioned for that next wave to the downside. So it looks like we're getting close to that point. So here's a few things. So we have the trend channel of that major ABC up for that large degree wave 4. That's the trend channel we broke out of during that decline towards the end of 2018. We have the lower trend line for that. And now we're coming up against that lower trend line where it formerly served as support. Now we're looking for it to possibly serve as some resistance. So that's an interesting signature that we currently have here. Also, we have the 618 retracement of just the overall decline from that 76.90 high to the December low. That comes in at 63.71, the 618. And then the 786 retracement comes in at 69.51. So right now we're in between the two. And it's certainly possible we push for that 786 retracement, as crude does have a way of, even when you have the right idea on it, it has a way of pushing beyond certain levels that you think it's going to. It did end up going a little bit lower in December than I thought it would, by a few dollars anyways. So it could certainly end up going a little bit higher, in this case by a few dollars. And now we have the equality relationship between where I have waves A and A labeled off of B. So the AC equality relationship comes in at 69.97, which lines up roughly, to within less than $1 of the 786 retracement of this overall decline. As far as technicals go, we're into the overbought condition on daily RSI, and we're also making new highs in price, but not quite as high of a high in RSI, at least as of yet. So we do have a bearish divergence in RSI, at least from this peak in price to this peak in price. This peak in RSI did not get exceeded by this peak in RSI. So bearish divergence there. Also a bit of one here on the MACD moving averages as well on the daily chart. So looks like it's close to a potential short entry, but if you do try and take a stab at it, keep a relatively tight stop. Personally, I'd like to see at least a little bit of a sell signal. It would actually be nice to break below this lower trend line of this parallel trend channel that we've been in since that December low. That would be a good technical sign. But certainly for a longer term short entry, multi-month, especially if you want to buy some options, buy some puts, it's probably not a bad area here to at least start building a position. And if I go to the, before I do that, so obviously if I'm labeling this wave 1 down, wave 2 up, we'd be looking for a wave 3 down, and then another, a wave 4, wave 5 down, then complete this larger 5-wave structure and potentially have a major, generational low in oil, and an incredible, low buy-in point, for oil itself, and also likely many oil oil related stocks, etc. But that's not in place yet, and currently expecting more downside to come once we do find this, what I'm expecting to be a wave 2 peak here. Okay. Now I'm going to go to the Thinkorswim candlestick chart here and just have a quick look. So on the daily candlesticks, there's certainly no sell signal yet, and we're still just riding this daily T line, this 8-period EMA. That's been a pretty good supporting moving average as we've been going up here. So we'd want to see some sort of candlestick sell signal. We'd want to start closing below the T line and having the T line serve as resistance instead of support and all those things. And this is the daily chart, and certainly on the weekly. Not really seeing anything here on the weekly candlesticks either. Just another, well, so far a big green week here. And obviously very overbought on the oscillator, but still just staying in that condition. But if we saw a nice sell-off starting and began coming off that overbought condition, that would be a little more encouraging to the downside. But we'll keep an eye on oil here. I think there's a significant pivot coming up. And just keep in mind, oil, it may at times seem to have some correlation, with the stock market, with the S&P 500, something like that. But that can be quite deceiving, because if you look at longer term charts of oil and the S&P 500, they have massive differences. I mean, it's not even close. You're not looking at the same chart by any means, even though there may be, at least what seems at certain times to be a correlation. It's really a very slippery one. So just because the S&P has basically stayed in its uptrend and bounced back from a major sell-off, that is no reason to believe that crude oil and certainly other commodities as well will follow suit. So I am still viewing this rally off the December low as a counter trend rally and a potential shorting opportunity, at least once we have some sort of technical confirmation. And it would take a lot to change my mind, and we would really have to break that 76.90 high for me to really question my overall longer term bearish outlook. And I just don't anticipate that happening currently, but certainly we'll keep our eyes on this one. I think it's a good trade setup at any rate forming here. All right, that should be good for now. Serial Trader signing off.